So I keep getting questions around how I was able to buy my first house in New York City when I was 28 and only making $48,000 a year. So in this video, I'm going to tell you the story about how exactly that happened. So when I first thought about buying this house, of course, I was in New York City and I was making under 50K. So my first thought was, obviously, you can't buy a house. So I was planning on buying a condo or a co-op. Later on, that evolved to me wanting to buy a 2-family and eventually trying to buy a 3-family. If you want to know what I ended up buying, then make sure you stay tuned to the end. So before I even started looking at any co-ops or condos, I wanted to know exactly how much of a budget I had. I filled out an application for pre-approval with MCU and also with Wells Fargo. And if you don't know what a pre-approval is, you just tell a lender what your details are, like your income, your savings, the house you want to buy. They actually look at all your documents and they tell you what you can get. With both Wells Fargo and with MCU, I did a pre-qualification and they were able to give me an estimate of what I could get for a mortgage and what all the different fees were. And I didn't know a lot about mortgages at the time. So when I got the documentation, it just looked like a whole bunch of gibberish and stuff. All I looked at was how much I would need to have in money to actually get the house, the closing costs and the down payment. And all I saw was that the number for MCU was way higher than the number for Wells Fargo. So I decided to stick with Wells Fargo. Would I do the same thing today? Definitely not, because I can read loan documents a lot better. Very well, actually, because I am a loan signing agent. Most people will do what I did, which is just look at the file numbers and pick a lender that way. So I decided to go with Wells Fargo, but the point of me was just to understand what kind of budget I kind of had. They had said around 170 was the budget that I had. I had actually just moved to New York City from New Hampshire, and in New Hampshire, condo fees were like 150, 200 bucks, like that was normal. And in New York City, that is not the case. Like your whole condo fee could be a whole grand. And that did not make sense to me. So when I started actually looking at the real life numbers for condos, and then I started looking into what the heck a co-op was exactly. And it seemed like with the co-op, you don't really own the place and you don't actually get tax benefits. You already get less tax benefits with a condo. So to get even less tax benefits with a co-op and pay, $500, $700, a grand for your fees, it just didn't sit well for me. So I shifted from thinking about getting condos to actually thinking about getting a 2-family instead. And I also thought, well, maybe I can qualify for some down payment assistance. And so I looked into it, and with my income, I definitely was able to qualify for it. But you had to go through a first-time home buyer program through designated nonprofits in the city. So I did register for, the program where you had to go through a seminar and then meet with a counselor and all kinds of stuff. And so I did sign up because your girl likes free money. And so I was like, well, if I can get my down payment covered, then why the heck not? I went ahead and signed up, and I don't remember the name of the organization that I was working with specifically. So I sat in on the first time home buyer seminar, which was actually really helpful and just walked you through what you'd have to think about in terms of insurance and upkeep and taxes and all that. That was helpful. I filled out all the forms that I had to fill out. So you had to fill out this huge document packet of, all your debts, income, how much you spend on like going out, all this stuff, like really helpful stuff, but just a lot. And then you actually had to sit with a counselor and meet with them several times for them to determine how much of a house you could get. I really just wanted the down payment. And so as I was talking to the counselor, I explained that I wanted a 2-family, but she didn't seem like she was knowledgeable based on what she was telling me, because she wasn't including my potential income from this 2-family as my income. And one of the reasons why I had decided to go with the 2-family instead of the co-op and the condo was that I learned that when you get a multifamily, so a 2, a 3, a 4-family house, your potential tenant income is going to be added to your income. So she wasn't doing that. She was telling me I had to pay on all these debts. And I was just like, ma'am, I already have a pre-approval from Wells, so this doesn't make sense. So I ended up not moving forward with this process because it just seemed too rigid. And I just decided to just go at it on my own and figure things out on my own, which is what I did. I went back to Wells Fargo to ask for a different pre-approval based on the fact that I now wanted to buy a 2-family. And the sales agent I spoke to over the phone said that I wouldn't qualify for a bigger mortgage, which again, because I had done my research beforehand, I knew that was not correct. And I tried to explain, he wouldn't budge. And so I said, okay, cool. Moving on. I moved on from Wells Fargo, and then I learned about a home buying program through my union that I was in at the time. But this home buying program didn't happen all the time. And again, if you're in this program, they would walk you through getting ready. They would link you up with specific lenders, and they would also provide some down payment assistance. And your girl was trying to get this down payment assistance because I like free money. So these seminars with the union did not happen all the time. And so I had to wait until one was available, which was a few months. And so in the meantime, I was actually going out and I was checking out different houses. Would I do this again this way? Probably not, but it was actually a good thing that I did because I learned something very interesting while I was doing this. So I started to go to all these different open houses. I specifically was looking for a two-family in Brooklyn. There were certain definite no-goes, like I didn't want East New York, I didn't want Brownsville, but other than that, I was willing to explore to see what I could get. At this point, I did not have a real estate agent. So I would just look on Trulia, see what houses looked cute, and then just show up at the open houses. For two families, brand new, like two-story owner unit, it was just really nice places. And one of these open houses, I had a conversation with the sales agent that was there. And in that conversation, it sounded like, this house had been bought recently and renovated, and, he was talking about it, got back, it was, up and ready in whatever amount of months. And so I was like, oh, interesting. Somebody fixed this up. And so I started paying attention to the last purchase price on these properties that I was looking at. And whenever there was no purchase price listed, I actually would go into city records and see how much the last sale was. Fun fact, if you're looking on Realtor, Zillow, wherever, and you don't see the last sale price, whatever county you're staying in, whatever city you're in, you can look up your county or city records and you can see the last sale price, who it was sold to, the whole history, like who the mortgage holder is. And I absolutely recommend that you do that. Because as I started to do this, I started to realize that these houses that I was seeing for $700, $800 had just been bought 3 months before for $200, $250, $230. And so whoever had bought them, fixed them up, and then sold them and made a whole ton of money. And so me being me, I thought, okay, well, if these people can just find this place on the cheap and then fix it, why can't I do that same thing too? I did not even have a pre-approval at this point because I was waiting for, the next homebuyer seminar from my union. All I knew was that I wanted to do this. I wanted to buy this house and fix it. I also absolutely had no money to fix this house myself. Absolutely had nobody that I could borrow this money from. I wasn't even trying to borrow the money. And so I went to my trusty friend, Google, to understand what types of money I could get to do a home renovation. And eventually I came across something called a 203K loan. As I was researching this back to the union home buyer program, the session actually came up. I showed up. I listened to the whole shebang. I was absolutely in and ready to get my free deposit money. And when I went to actually connect with a counselor, at that point, I had decided that I wanted to get a 3-family because when I was looking at the prices, a 3-family was a little bit more expensive than 2 families, but not that much more different. And so I thought, well, why not get a 3-family and make more money? Because why not? When I sat down with the home buying counselor from my union, I was all ready for my free deposit money. And when I told them that I wanted to buy a 3-family, they said that the program would not allow for that. I could only use the down payment assistance for a single family or a 2-family. I was a little bit sad because that dashed my dreams of my free deposit money, my free down payment money. But I was really determined to get this 3-family. A 2-family just no longer was in my head or at all. It was a no-go. And so I walked away. I did not sign up for that down payment assistance program. I did look at other ones with the state as well, but it just seemed like it wasn't going to be a good fit. Because now I wanted a 3-family, and I also wanted a 3-family that I was going to fix up. So I looked through Google. I did find this 203K loan, and I learned about this 203K loan in a forum called Brownstoner, which was different homeowners in Brooklyn that had brownstones, and they were just telling stories about how they were able to fix it up. And so this person in Brownstoner was talking about their 203K loan that they used, and I was like, oh, let me see. And I researched again, and it seemed like I could actually do this for real. And so I started to call different lenders to find out about getting a 203K loan. And the thing about New York City is it's a great city, but everybody's trying to hustle. I called probably 12, 15 lenders, and all of them said that what I was trying to do was not possible and tried to get me back into a regular loan with no renovations. And because I had done my research, if you haven't caught on yet, make sure you do your research before you go out asking professionals. Because I had done my research, I knew that was bullshit. And it's unfortunate, but what I learned in my home buying experience is just because you are talking to somebody where this is their job does not mean that they necessarily want the best for you or that they're going to tell you the truth. Maybe it wasn't malicious. Maybe these were new lenders. I don't know. But I think most likely they were just trying to hustle and get their commission. And since they were not able to fund 2 or 3K loans, they tried to tell me that it was not possible. Most first-time home buyers are not informed, and probably most people would have just given up and got a regular house, but that's not me, honey. That is not how I roll. So I continue to use my best friend Google to better understand this 203K loan thing. What I learned is that not all lenders do 203K loans, and I found a way to actually look up a list of the banks that had funded 203K loans in the specific city that I was looking in. So that is how I was able to find my 203K lender. The type of 203K loan that I was thinking through, which was one that would accommodate a lot of work, would require a 203K consultant or inspector. So I found a list of consultants in New York City. And so I actually called a few consultants. I called a few lenders that do 203K loans. So I spoke to some 203K lenders. I spoke to some consultants. One in particular referred me to some banks to apply through. So I talked to a couple of his guys, and I called a couple of my people that I found. And that is how I find my 203K lender. So I ended up getting my pre-approval through a company called Jersey Mortgage. My loan officer was pretty great when I met him, but the rest of the experience was generally unpleasant. So I do not recommend Jersey Mortgage. The loan process that I had specifically was absolutely terrible. And I'm not going to go into all those details. If you would like, I can make a separate video just about the application process and the closing process for a 2 or 3K loan with this particular lender. My experience was terrible, but don't be afraid. I still want you to get a house because I have gotten 2 mortgages after this, and those experiences were way better. No comparison whatsoever. So now that I felt like I had a decent plan, so I wanted a 3-family house, I was going to renovate this house. I had my pre-approval ready to go. My $48,000 was pre-approved for, I think around $600,000, somewhere around there. And guys, I was absolutely shocked that they were willing to give me that much money because I had a ton of student loan debt. I had a ton of credit card debt. I had a car loan. I had a personal loan. I had over $100,000 in debt. And so the thought that someone's going to give me that much money when I was making less than 50 grand in New York City, that completely blew my mind. Completely. And so if you're in a place where you think that you're not making enough money to get a house, talk to a lender. Let the lender tell you you don't make enough money. Don't decide by yourself. Don't self-eliminate. Go and actually talk to not just one lender, talk to 3 lenders so you understand exactly what your situation is, because I was shocked about the $600K. So I went ahead and I found a real estate agent. Honestly, I just Googled her. It worked out. I got my house, but she wasn't super helpful. But I also knew exactly what I wanted, so I didn't need a super helpful realtor. Don't do what I did. I don't recommend finding a realtor this way. Yes. If you Googled your realtor, let me know in the comments and let me know if it worked out. But again, if you want me to make a video on like other suggested ways to find a realtor, let me know when I can do that, because I have better suggestions now that I am older and wiser and have bought other property. I have a free home buyers checklist that you can actually grab for free. I will leave the link in the description below. So I signed my agreement with my realtor, where she's officially my buyer's agent. I had to look up to make sure it was not going to cost me extra money, which it did not. And so yes, I got a realtor. So she started sending me listings for that area. And I actually specified what zip codes exactly. That way I wasn't getting random places that I was not interested in. And then eventually I actually switched over to include a specific neighborhood in Queens, which she added as well. Now, how that other neighborhood in Queens came out was I was actually looking through all these different house listings. I realized a lot of the stuff that was available that needed work either had been listed like a long time before and it was already pending, or it was just like completely crazy where I did not want to deal with it. And so again, I started Googling and researching like how I could find a house that didn't work, that needs work. And it seemed like some people were buying foreclosures. And so I did a little bit of research to see like where I could find these foreclosures. So I ended up signing up with different banks just to get on their list. And this wasn't in 2008. So there wasn't a flood of foreclosures taking place. But I went into different sites. I put in what cities I was looking in, which was New York City, and I just waited for emails. I didn't really get that many, honestly. I got the most from Wells Fargo, and I will link the site in the description below. And so the really cool thing about the Wells Fargo site is that you sign up and you put in the city that you want specifically, or like a whole state if you want. And whenever there's a property that's about to come on the market, they actually send you an email. I checked the emails, I was seeing what was available, and then this one house came up, and it was in Queens, which wasn't my top priority, but I was going to check it out. And it looked like it looked really big, but then it seemed like it wasn't one family. And so the great thing about this particular site is that when something is about to come, you don't just see the pictures of the particular place, you also see the realtor information. So I called the realtor to get an understanding of whether or not it was a 1 or 3 family and when he thought it was going to be ready. So he confirmed it was a 3 family and that it will be on the market in about a month. So after that, I had my eye out for that particular house. So as soon as it came on the MLS, which for us, the consumer is, Trulia, Realtor, Redfin, all that kind of stuff. Like once it came on the MLS, I got the email first from my realtor because I was on her automatic email. And so I knew that I wanted to see the place. So I called her and we went to see it. And really that's the only place that I went to see, because the stuff that she had sent me before was just regular houses that I didn't think were worth the money, because I thought I could get a better deal by fixing my own place up. To me, I didn't even know how people were even living in it. Because there was actually a gentleman that came by while I was leaving, and he was like, "Oh, are you gonna buy the house? I used to live here a few months ago." And I was like, "Wait, what? You actually lived here?" It definitely was a lot, but I had seen all these renovations that looked beautiful. Then in my head, I was like, well, if they did it, I can do it too. The house was listed for $226,000. I think we offered 190 something, 198. And then they asked for, best offer. So we ended up agreeing at 206 and I won the offer. The thing with bank owned properties is that, the first few days of a house being available, the offers are only available to owner occupants. So what that means is for you, if you are a regular person that wants to go in and buy a house and fix it for yourself, you get first dibs on getting in. The investors that have cash money, that of course would beat you out because they're paying in cash, they don't even come into the question. You are only competing with other actual regular people. And most regular people do not want to deal with fixing a house. And so you have way less competition. And you are probably willing to pay way more than a regular investor because you don't need to flip the house. You're buying it and fixing it and keeping it. And so if you are not looking at places that are jacked up, you need to start looking. And I don't mean jacked up like you don't like the paint or you don't like the tiles. No, jacked up like there's a hole in the roof or there's siding missing. Jacked up where you cannot get a regular mortgage. That is the type of house that you want to be looking at if you feel like you cannot buy a house, if you feel like there's too much competition, if you feel like it's too expensive. You want to go where everybody else is not going, so you are a big fish in a little pond. So we put in the offer. I won the offer. That was in February-ish, and we ended up closing in July. So yes, it was a long time to close on this loan. I don't want this video to get crazy long, so I'm not going to go into the whole process with the actual like loan application and closing and all that. But if y'all want to drop the word closing below and I will give you the whole story. The going price for 3 families in the neighborhood was around $570, $600. The loan that I got was $206 for the actual mortgage, and then I was able to put in the renovation costs on top of that, which made it $297 for that loan. So pretty much as soon as that renovation was done, I had already made $300,000. But I'm not really an equity person. I like equity, but what I care about is actual cash money. So what's more exciting to me was that I was able to live in New York City without paying rent, which is really nice. Today, that house is worth around $750. That's a very conservative number. Probably get more like $850 for it right now. That 203K loan is an FHA loan. So I only put 3.5% down for that house. My interest rate was 4.5%, and my mortgage was around $2,700 a month. And, you know, of course, because it is a 2-family, my tenants actually paid that mortgage for me, which is nice. There are all these things when I was buying this house that I just, I didn't really know what I was doing. I was just going and just figuring it out. And so if you're right now, you want to buy a house, but you don't really know how to go about doing it, I totally get it. I understand. But the best way for you to figure it out is to actually go out and start taking steps. If you need a little bit of help with figuring out what steps you should take, don't do it the way that I did it. I got to the end, but I definitely took a longer route to get there. I have a free home buyers checklist that you can actually grab for free. I will leave the link in the description below. But absolutely just start doing something. You know, don't just sit around and wait, because if you do, next thing you know, it's going to be a whole year and you've paid a whole year of rent to your landlord instead of using that year to pay your own mortgage down. So I did not get that down payment assistance that I was looking for, but it ended up working out just fine. I actually look back at all the money that I needed. I only needed $22,000 to get into this house. $22,000 made me $300,000 in 2 years. And that $22,000 has made me $500,000 since I bought that house. So my belief is that before you worry about doing all these different kinds of businesses, buy your first house and buy a house hack specifically. 1, because you are going to pay lower rent. 2, if you buy a house where there's already equity, you're going to make money off the bat. If you're able to buy a house that needs renovation, it's going to make even more money off the bat. But at the very least, even if you just save money on rent and somebody else is paying your mortgage for you, you're already winning, because for most people, their living expense, their rent, or their mortgage is the highest expense they have every month. And so my question to you is, what would it mean to you if you got rid of that whole living expense? If the idea of paying no rent and no mortgage sounds great to you, make sure you check out this next video so you can see exactly how you can do it.